In the crypto markets, we're seeing a correction. They are starting to succumb to what we're seeing in the equity market, which is this strike against technology, growth, innovation. We think that's going to be short-lived. Uh, and um, and I'd like to end right now by talking through just one more thing, going back to autos and giving you a sense of where the bubble might be in this market. It is not in innovation stocks. They've been cut in half, many of them, some by 75%. Um, but listen to this. I gave you the story about Ford reporting that it would have to double its electric vehicle production of the F-150 Lightning, and the stock just taking off, not paying any attention to the auto statistics I just mentioned. Uh, well, when I think of what could happen in that space, and I see these stocks ramping on sales that mean nothing to these companies in terms of their earnings, shall we say, right now. In fact, they need to invest a lot more in electric to make it happen and to move the needle in these companies. But what if we're right and there is not a 20% increase in sales? Maybe sales are flattish year to year. That would put them at roughly 15 million units. And they'd probably have to start cutting prices if we're right on the used car market and the pricing there, which means they're probably going to be facing some credit issues since they're hugely leveraged to the credit that people take out on their autos. And as prices go down, residual values go down. And, auto credit was the best performing credit in 08, 09. And so there's a lot of complacency in that market. In 08, 09, the homeowner had to decide, okay, I can't pay everything. I'm out of work. What do I pay to just keep things going? Well, they were going to pay their auto loan down and default on their mortgage because it would take a while for them to get kicked out of their house, but they needed to get to their jobs. Today, that would change because of ride hailing. So we think that complacency is misplaced and that the auto credits out there could become a mess. So if I'm right on any of this, there will be disappointments in terms of the auto sector. And I wouldn't be surprised if at least one of the companies loses money next year, which would be most unexpected. And if it loses money, what is that valuation? Where are the crazy valuations now? Are they in our stocks now that Zoom is down to 33 or 35 times this year's earnings? Or is it in an auto stock where there might be losses? And what's that PE ratio? That's infinity. That's where the bubble is. And I think you're going to see a lot more cases in point as this year moves along and the innovation that we see evolving so rapidly, DNA sequencing, transforming healthcare, robotics solving the labor shortage problem we're having, energy storage, the consumer preference towards electric, artificial intelligence, which is the glue that is helping all of these technologies converge. And the last one, blockchain technology. We think that we're in a period of innovation that was the dream in the late 90s. But those companies were vaporware. They were based on nothing but eyeballs. We have real revenues. We have incredible growth rates. And if we're right and the economy has an inventory problem, then our growth rates are going to look far superior to anything you'd find in the value space. And we are really looking forward to that.